and I thought that we would do this together because since I met him and come into the group, we've been doing a lot of things together. So why not do this, right?
Right.
So let's tie into this. Can we see that over there?
Not this fine print.
Well, I'm going to point it out to you.
Good.
Most of you have seen this already because Mike talks on it quite a bit as well as I do. And we've worked together to build this into our presentations when we sit with clients. So this is the pie chart of health, if you will. Now, this is related to Medicare, but you can plug in health insurance anytime you want and plays the same. And longevity health planning is what one needs to understand about your health or your Medicare program and where the shortfalls are. Because when we look at this, think of this as a big cap, if you will, a big lid that goes over the top of a bag of money. And all these white spaces are the hole in that lid. So if you were to turn your bag of money over, you think you'd lose a few dollars?
Yeah.
And right here we talk about the 4 L's. You've heard me talk about this before. Mike's talked about it before. The 4 L's of retirement. Anybody that's doing your own retirement, or if you have a retirement representative, a financial planner, they should be addressing the 4 L's, which is liquidity, longevity, lifestyle, and legacy. That's what retirement's all about. But if you haven't done it yourself, or your financial representative hasn't put a longevity health plan on top of that to fill these holes, this stuff is all affected. Liquidity, longevity. You know, the greatest fear that everybody still has on every single survey in retirement is outliving their money. But they don't put these extra things on top to prevent that. Kind of silly. So we've got acute care, we've got extended care. So Mike's going to go into acute care. He's going to talk about what he does as far as what we call the second half of life, seniors, but relate that to health insurance as well. So Mike?
Okay. Thank you, Tom. I want to touch on longevity just for a moment. Longevity isn't just about your longevity. How long are you going to live? But you need to take into account what's the longevity of my spouse. Maybe for some of you, what's the longevity of my parents? Because some of you may be in a position where you're going to have to care for them. And one of the things that people always say, well, I don't know how long I'm going to live and so forth. Well, in the Benefits Quarterly, which I subscribe to, they talk about retirement. And the Society of Actuaries and the American Academy of Actuaries have developed a tool called the Longevity Tool, where you answer some questions and it will project what's the probability of you living 10 years, 25 years, 30 years, 50 years, whatever the case might be. And I ran it on myself, and I'm just going to pass this around so you can see what the report is that's provided to you. And the way that I answered the question was, if I answered all the questions, where there wasn't many, a half a dozen, and in one case I put excellent health, and the other I put average health. And the probability of Mike Gallagher living another 25 years on an average health is 50%. So that puts me at 86, 87. The probability of Mike Gallagher in excellent health is 58%. And you can look through this report and it'll project what's the probability of you living 85, 90, 98, whatever the case might be. I will tell you I have 0% chance to live to be 100. It dropped off at that point in time, which might be a good thing just as well. Anyways, let me touch on the red color on this chart represents what Medicare Part A covers, which is inpatient hospitalization, and that also includes skilled nursing. It includes hospice care. It also includes home health care. And as Tom mentioned, you can substitute your own health plan. Most of us are covered by a health plan that has deductibles, co-insurance, and so forth. With Part A of Medicare, there is some deductibles, and there's some per diems associated with that. And if someone were in the hospital for 150 days or longer, Medicare is going to cover a portion of that, but your minimum out-of-pocket exposure is 48 grand. If you live, or if you're in the hospital over 150 days, Medicare doesn't cover anything. So that is why people will purchase a Medicare supplement to pick up what Part A of Medicare doesn't cover. In the blue area, that is Part B of Medicare, and that represents outpatient medical surgical, emergency room, diagnostic testing, durable medical equipment, and so forth. There is a deductible associated with Part B of Medicare. Currently it's $183, and then Medicare is going to cover 80%, leaving you responsible for 20%. But unlike a traditional group health plan where they'll cap your out-of-pocket, Medicare doesn't have a cap. So you're going to pay 20% of whatever your out-of-pocket expenses are associated with outpatient medical surgical. Again, that's why it's important for people to at least consider a Medicare supplement program. For those of you that are covered by an employer-sponsored plan, they'll typically cap what that out-of-pocket exposure is. Prescription drug. Medicare doesn't cover prescription drug unless you enroll in Part D of Medicare. And there's 24 different plans associated with that. I assist many seniors with respect to what are their medications and helping them select a Part D program that's going to make the most sense for them. Dental services. Medicare does not cover dental services. And so that is one of the second largest areas of unexpected expenses that seniors have as they age and needing additional dental services. Dr. Dan has talked about that considerably. Physicians Mutual does offer an individual dental plan. It's not just for seniors. We have programs for any ages, and the pricing is really pretty simple. You have a rate for people age 49 and under and those that are 50 and older. For 49 and under, you're going to, depending upon the plan one selects, you're going to see a rate between $25 a month and $36, $37 a month. If you're 50 and older, you're going to see a rate between $30 a month and about $47 a month. Some key highlights with our dental program is, number one, you can see any licensed dentist in the US and Canada. There are no deductibles. And probably the biggest differentiator is there's no limit on the amount of benefits we will pay in a given year. Most plans will cap that somewhere between $1,000 and $1,500. So you can see as you go through here, on the acute care side, there's a lot of holes. And as Tom pointed out, if you picture that as a filter, as we age, if you don't have those white spaces covered with some kind of protection, that is money that's going to go out over time. And as I'm passing that longevity health plan report along, go online, it's free, take a look, and you're going to be either happy because you've got a lot of longevity left, and then you need to emphasize what's my plan to get that protection so that I don't have an unexpected medical diagnosis or medical crisis turn into a financial crisis. As you can see here on this side, and I'll turn it over to Tom, extended care related to nursing home, assisted living, memory care, home health care. There's limitations or it's not covered at all, and that's why people need to have a plan. So I'm going to turn it over to Tom for the moment.
So, you guys have heard me talk about life's two certainties, have you not?
Yeah.
What are they? If anybody says taxes, you're out of here. What's the two life certainties? Aging and death. We can't avoid aging or death. So tell me this, when does aging start?
At birth.
Day one.
When does end of life start? The day we're born. We are marching towards an end of our life at some point in time. We just don't know how long that's going to be. That's exactly what Mike was talking about. We don't know what our lifespan is. We don't know when life happens, events are going to come our way. Yet I deal with people all day long that think they can time it. And you've heard my stories in this last year about how people have missed that timing. And now I can't put together a longevity health plan for them because they can't get through underwriting. They waited 1 day too long, 1 month too long, 1 year too long. So what are the 4 planning methods you've heard me talk in the past about funding these holes? What's the first funding method? By default, your income. So do the math. Long-term care today in Colorado can be as much as $10,000 a month. Yikes. Or more. Wake up, smell the roses, because that's what it costs. And it's not going to get any cheaper. So if your income, doing the math, doesn't work, second option of funding is the government.
Yeah. Oh, that's going to help. Yeah.
We've talked about Medicare. Now Medicaid does fund a lot of funding. What is Medicaid? Poverty program, it's welfare. Now I don't know about you, now I work with some Medicaid planners and God bless them, but something sticks in my craw about people that have money and assets that want to transfer them to have us as taxpayers pay for their funding of their care. I'm sorry, that bothers me. And a lot of those people are the ones that complain about other people being on the government trough, but it's okay if they get to participate in it. So there's avenues, but I'm telling you, those avenues are shutting down real quickly. And our government cannot continue to pay for the baby boomer generation that's passing through and depending on the government to pick up the slack. Number 3 is your family. Your spouse will take care of you, right? Your kids open their doors and say, come on in. Do you want to burden them with that? I always use the phrase, would you rather have your spouse supervise your care as opposed to provide your care? Would you rather give your children the gift of life as opposed to ask them to put their lives on hold to take care of you because you didn't want to put a plan in place? And the 4th funding option is putting an income protection plan together, a longevity health plan together. That's sitting down and actually having a plan instead of telling yourself a story or making an excuse. I hear it all the time. For 33 years, this is what I've heard. By the way, there's the 5th. I've talked about it before, but now we got the prop. The 5th one is the Hope and Prayer Charity Bucket.
GoFundMe.
This is GoFundMe. 125,000 campaigns a year. People ask for memorial service funding from generosity of community to pay for things that they didn't put in place themselves. So I think we're at the end of our time.
No, you got it, about a minute and a half left.
All right. I can do a second.
Oh, there you go.
So by the way, I just want to tell you, if you guys think I'm kidding about minister, I've got my certification right here, in case you want to check it. We've got some tools, but in our giveaway package today, to emphasize this point, because this blew me away when I went on GoFundMe. We talk about this all the time, that people are always constantly looking for the generosity of others, and thank God we've got a compassionate society that steps up and do what they can. But you know, whose ultimately accountability and responsibility is it? It's ours, right? So in our giveaways and the drawings today, we put together a little kit. You've got my calling card to my website, which is Pure Education. You've got a coupon for my book that's going to be, actually I've got Neon Pig format in it now, and we should have it out in the next 2 or 3 weeks. Thank God, finally. And a gift card, and this demonstrates the difference of your starter bucket for your campaign to get people to give you money, or going to my website, or spending time with Mike and educating yourself, because the difference could be $100 grand or more.
There you go. All right.
could be that distinctive. So, Mike, you want to finish up?
I just want to say, anyone that has questions for us, and really we just educate. Yes, we're here to sell and promote our programs, but most importantly, we want to educate you or your family members or friends on how to develop a longevity health plan. So thank you.